Last week saw a record number of new all-time high weekly closes. The S&P 500 hit a new fresh all-time high weekly close. The NASDAQ, a new fresh all-time high weekly close. And for Bitcoin, a new fresh all-time high weekly close. Now, of course, the view is not that the markets are going to collapse. However, I think there are some warning signs that we're beginning to see yet again at all-time highs, which suggests the next few weeks, if not few months, are going to be a little trickier than the market anticipates. Now, we hear about warning signs all of the time. You're probably getting sick of it just like I am. However, I think it's important to address these in today's video because it can help you with your portfolio, whether you've got a short-term outlook or a longer-term outlook. So let's dive into the macro charts today, stock markets, commodities, Bitcoin, and we'll update you with the altcoin cycle as well. Hit the like, subscribe to the channel if you are new here. You've reached your home of macro cycle analysis. All right, let's kick it off, starting with the big picture. The winner's curse phase of the 18-year cycle, this is still continuing on. We're still seeing higher prices, as I suspect, as we've been talking about now on the channel for many, many years. However, I don't think it's going to be an easy ride from this point based on what we're seeing next with the stock markets and some of the sentiment reading indicators. As I said in the intro, we've seen new all-time high prices for the NASDAQ, for the S&P, and it seems like, well, we can tell now that it's off the back of many of the AI companies, the biggest in the world. NVIDIA had a new all-time high price and a new all-time high weekly close. That's now 2 in a row. The week before was also a new all-time high price and new all-time high weekly close after it had quite a significant correction. It's also come up to the 50% and closed above it. So for the shorter term, could be a little bit of turbulence here, but longer term still looks like there is further to go. But what I'm addressing in this video is, of course, these next few weeks, if not few months. Microsoft, also very heavy in the AI, had another new all-time high price and new all-time high weekly close. That's making it 2, 3, 4, 5 weeks in a row with new all-time high weekly prices and weekly closes. So quite a significant stretch. Now, I'm talking about these long stretches as that's going to be the first important point that we address with the market sentiment. For Meta, also a new all-time high price. As for the S&P 500, we did see 10 weeks in a row to the upside. And if you're following last week's videos, we're also looking at the daily stretches. We're now at 8 days in a row with higher highs in this upswing, which, like we've seen over the last 5 years, has only happened about 3 times every year. We're already at our second one this year. And the important thing, at least of course from my analysis, is that once we get to these really long stretches in a row, especially as we can see, if they happen around all-time high prices, typically there's going to be a slowdown. And we can put this into context looking back at the current ones. Now, for January 2025, there was 8 days up in a row to this peak. That essentially was, well, basically right around the all-time high price that was put in December, and then it was tested again in February of 2025 before a significant collapse. Now, I don't think there's any sort of significant collapse like we saw in April coming up. We've already seen one of those, and it's, well, pretty unlikely, not impossible, but pretty unlikely that we'd see another collapse like we saw of 20% happen just a few months later. The reason I think that would be unlikely, one, obviously the data doesn't suggest that it's probable. There is obviously always a possibility. But two, in terms of market sentiment, generally when you get these big moves to the downside and you just flip it to the upside, when you get these big moves to the downside, a lot of people are hoping for another significant correction so they can buy the dip because they've already seen it happen once and they think the price has to come back. Generally, the market doesn't give you gifts like that. So although I think there is some pause to happen here, it doesn't seem like one of those. So just to put that to the side, 20%, very unlikely. But like we saw with this all-time high, 8 days up into this peak and then a correction and a slowdown. It basically took several months. Now, we had one back here in August 2024 as it came out of the Japanese yen carry trade fear, big run up, nearly to new all-time highs. It corrected, took some time, and then broke into a new high. Now, we look back at the last ones here for 2023 and 2024. You had this 9-day move up, paused for a while, and then took off again for another 9-day move, which got it to a new all-time high. So this one happened before the new all-time high. This one here happened at the new all-time high, and then it had to consolidate again before it got into its next 9 days and another 8 days. So there was a lot of built-up pressure out of this 3-month correction in 2023. Now, 2022 and 2023 were basically a huge accumulation time. As you might recall from the channel, you could go back, look at the receipts from all those years ago. We were looking at those lows potentially being some pretty significant lows for the market. Of course, I'm not trying to call the low, but it seemed like a time when most people were looking for a major recession on the back of banking crisis, inflation crisis, rate rise fears. There was Russia-Ukraine war, which was just starting in 22, the debt ceiling crisis, another Middle East crisis, yet another Middle East crisis. We thought this was a pretty good time for a low for the stock markets and for Bitcoin. So moving forward from that, there was a lot of built up buying pressure, which is why we saw 9 big days up here into the high, another one to break a new all-time high, another one here to put in another high, and then 8 days to basically finish it off. And then the market had to correct. Took some time before it started to move again. Coming back, 10 days, this one's through the war, big correction. Another one here, new all-time high, corrected, and basically put in a new all-time high and then corrected. 8 days, 12 days. You can see each of the times these happen, although it may not be the exact top, there's usually a period after it that the market needs to consolidate after a significant move. Now you can go back and test that more for yourself, but hopefully that has given you enough confidence in the way that when you see these long stretches, it's not a guarantee, but there is a much higher chance that we're going to see a bit of a pullback, and the pullback can last some time. On top of that, the sentiment has now reached extreme greed for the first time, at least from what the data shows. Now, this only goes back 12 months, and what we're doing at TIA is to track or keep a record of this on TradingView through one of our indicators so that we can see the history over 12 months. I think that's going to give us a lot more insight to the market sentiment for the S&P 500. So you can see here for the S&P, hit 78 on July 4th, obviously for the data on July 3rd, and the day before was 75. Greed, finally, extreme greed for the first time in this 12-month reading here. So we're starting to get pretty extended when it comes to market sentiment for the S&P. Now, I know you're potentially here for Bitcoin and what's happening there with the new all-time high closing price, not price yet, but the new all-time high closing price. And the S&P 500 is a pretty good leading indicator as to what generally, not always, but generally happens next for Bitcoin, which is why I'm spending so much time looking at the broader markets as opposed to discussing Bitcoin and Bitcoin only. I think that's a very blindsided view when you're just looking at Bitcoin and expecting some of the 4-year cycles or stock to flow models or any of these things to continue to play out time and time again just because it's only ever seen in Bitcoin. I think we need a broader approach here. So coming down, looking at the rest of the S&P 500, market momentum, stock price strength has increased, extreme greed now, but the one that's very interesting is the put and call options. When the ratio of puts to calls is rising, it's usually a sign investors are growing nervous, but this time it's declining. So it's generally a sign that they're getting too bullish. And the only times we've seen this, at least in the last 12 months, at this ratio of 0.61 are now at a new all-time high price after 8 straight days up. 10 weeks has also occurred, pull back and then another move up. So very, very long stretches to the upside. You have 0.62, 0.63. Those are the other 2 fresh highs from earlier this year. And then you've got readings of 0.61, 0.61, 0.61 again from November and December, which was the all-time high. And the last one here is 0.61, which is the same reading as now, almost exactly 12 months ago, which was that July peak before we saw the August correction with the Japanese yen carry trade. So here is that July peak right there. Then you've got the November peak, December peak, January peak, and February peak, which is essentially all roughly the same price at 6,000 to 6,100 points. And of course, we're a long way from that now. So we've covered price. We've covered extensions with price on those days. We have covered market sentiment. We're seeing the extreme greed run back into here. And we're also covering the put and call options, which is kind of like investor positioning. where they are looking to, what they're thinking is going to happen next in the market. Well, it doesn't seem like it's affecting Bitcoin much at all. Obviously, Bitcoin at new fresh high prices. And if we take a look at the model that I've been presenting now for several years, looking at when the S&P 500 breaks into new all-time high prices, generally Bitcoin is also dragged along with it to the upside. The white boxes are the area where the S&P has run up, and I've had a comment at the bottom, Bitcoin bull. So you can see the line running up as well. That's for the 2013 top, the 2017 top. Very clear run here for the S&P 500. Doesn't look like much on this chart, but that is a very clean, straight move there on the monthly, long-term basis here for the S&P. Bitcoin bull in 2021, running into these highs, multiple of course, and here we find ourselves again, the Bitcoin bull as it runs into fresh highs in late 24, and of course now you're at 2025. So short term, it looks like we're at least pausing. Longer term, I don't think it's going to have too much impact at the moment. And an even more positive, hopium, big outlook here is that as this continues to wind up on the price of Bitcoin, as we'll look at on the shorter term in just a sec, we could be seeing, I really don't want to put too much hopium here, but it's going to sound like it. We could potentially be seeing a breakout of this 18-year trend. And I say 18-year because it's from 2007 to 2009. So, you know, the numbers came in 2022. You could call it a 3-year trend, but essentially it's from the top to the 2022 top. That's the previous cycle top. Then the lows, 2009 to the 2022 low. And you can see multiple times now, the S&P 500 has hit this logarithmic overhead resistance. Now we're just less than 1% away from that again. Last time we did this, it was 4 months. We zoom right in here. 1, 2, 3, 4 months hitting that resistance. Big correction, almost to the support line, which is extremely crazy within itself because of how far down that line was. And we find ourselves all the way back up at this line. So although we might have a bit of time here to consolidate this pretty significant move into fresh highs after such a significant fearful event, if this thing decides to break through, and I say if because I don't want to give too much bullish momentum hopium to the other side of this, is that if this breaks through, it should be a relatively good move to the upside. And I'll say good and reserve the right to something more awesome later. So I think if that happens for the S&P 500, I think it's a matter of time until it happens for Bitcoin with its own 7-year resistance line. You may have seen this before, where it had been rejected for multiple times over the years. And just recently, we obviously had the top there in 2024 and then 2025. And then again, very, very short in May of another rejection at that line. So as this continues to wind up with the short-term change in trend from this extreme greed on the stock market, greed for Bitcoin, as we can see with the Fear and Greed Index now closing out today at 73. So we haven't stretched into extreme greed yet since May, just for that single day. So it's good news. The move here should be building up for another pretty decent move to the upside. Now, I think if that happens, we've got some pretty good targets to reach above the resistance level here, which is currently coming in at around $115,000. So I'm looking a little bit further up. I'll get to those in a moment, but I think it's important to cover off where the S&P can go and of course have a look at the strength in the background for Bitcoin. This one here is a little different when it comes to the bullish move that we could potentially be seeing with the S&P 500 this year and over the next 12 months since it had its golden cross. Essentially, golden cross is just looking at the two moving averages, the 50 and the 200 day. As they cross each other, you start to see a pickup in momentum. When it crosses above 50 above the 200, that momentum is picking up. However, what Seth has written here is that when we see this with the 200 day rising, that's rising, and then maybe you see the 50 day start to overtake it as it's rising, we end up with this. This is a lower return, 6%, looking at the blue because that's 12 months out, than what we would see here if the golden cross was declining. So if we had a 200 day and it was somewhere declining like this, but we eventually had the the 50-day start to overtake it, cross over it as the 200-day was declining, then we could be looking out for something like this. So the future still looks positive in terms of a percentage, but according to the stats, potentially lower than what we have seen in the past. And that could all be coming down to us running out into these peaks of the all-time high. So although I filled us with hopium, I just want to keep things into perspective that we're at this stage of a golden cross. We're at this stage towards the peaks of the market. Should be able to see a small gain. I think that's still good news there. But of course, with Bitcoin and these overhead resistances that we're seeing with Bitcoin and the S&P, there is a pretty good chance, in my opinion, even though we're seeing this data here, that we do see some pretty significant gains to the upside. When the S&P performance up year to date, so we saw that end of June, was up 5 to 10%, which the S&P has been at the midpoint of the year. What happens next? For the last 75 years, if we saw at least 5% to the upside, which we saw here 5.5%, there is an average of 13.8% to the upside. So pretty much kind of in the middle here. You're at 13.8%, somewhere below 18, but above 6%. And the median is around 13%. How often does this happen? 93% of the time. So the stats are still on the side that we're going to see higher prices, which I think is still going to be very, very helpful for Bitcoin as we see the S&P start its next move to the upside. Clean runs like we saw in 2021, clean runs like we saw in 2017, clean runs like we saw in 2013. And each of those occasions, we've seen pretty significant moves there for Bitcoin, even though 2021 happened earlier in that streak. It seems like with the current price pattern for BTC, we could be lining up for something similar to the two first cycles, 2013 and 2021, where we had larger moves compared to what we saw in 2021, where all the excitement was contained within that first half of the bullish leg, running out into those new all-time highs. Now we still have to look at the price targets for the upside of Bitcoin once we get this breakout above the overhead resistance. But I also wanted to update you with silver. That's a massive bull market that I'm following here on the channel, even though of course we're seeing warning signs of the slowdown for the stock market. Silver has breached a new fresh price here. It broke last week's high, last month as well here for June 2025, now sitting at $37.43 an ounce and just 15 cents away from a new 14-year high after it hit a 13-year high. From its current all-time high back in 2011, so 14 years ago, it is now down 25%. So getting very close to that new all-time high price and a potential for further price discovery in the next significant bull market to the upside. So Bitcoin, silver, S&P, stocks, well, the AI stocks in particular, and of course the NASDAQ, new fresh high prices, whether they're all-time high prices or closes. Everything is still on that side of the 18-year cycle. Prices heading up, and of course land prices for the US continue to climb as well. As for prices, Bitcoin, we're looking at a few of the short term to the longer term. I'll start with the short term, looking at the weekly bars at the moment, which are going to change more often as more data comes out. Now I've got this on a monthly chart, but this is for a short term outlook looking at the weeklies. 50% at 117, 100% at 136, and I'm just going to round the numbers, 150% extension of the current price range that we have, sitting around 154,000. Now, as I start to overlay the price extensions, we'll begin to see price clusters, and the price clusters are good areas to look for a higher chance or a higher probability trade into those areas. That's essentially how Gann used them. Doesn't mean that it's a guarantee, but there is often a better chance that we would see price areas that the price is drawn to before you'd see some sort of resistance, so around these areas. So as I start to bring up the next price ranges, we're having a look at where we get these clusters. And sometimes they form around key psychological levels. So 117, 119, and of course, there's 120 is one of those psychological levels that people have often talked about. Something a little closer here is around the mid 130s. You can see how much they're overlapping. It's quite hard to read those numbers, but it's around 134, 135. Now we take a look at the larger range here, 2022 to 2024, as we've already had a hit on this one. So just so you can see that, and if I put them back on their exact points here, down to the cycle low, then that already hit 100. And if we look out to 150 for an extension of that move, again, it comes in at around 136. So we have 134, 135, 136. And the last one here is the entire bull market thus far, from the 2022 low to the top, projected from the current low, looking at the 130s and the 160s. So it doesn't mean that you get a straight up run to those levels. It's going to get tricky, especially if those emotions continue to get higher with that extreme greed running in, and you see some moves up to those levels to test, and maybe a pullback, and then a test and a pullback. Each time we would see a test and any pullbacks, that's where the emotions are going to get even more difficult to manage because of the length that we're into this cycle already. So for those two targets there, obviously, or three, 120s, mid 130s, and around the mid 160s. But in terms of time, we are looking out towards Q3, potentially into Q4 for this peak. Now, because the video's gone so long, I'm going to save this for a follow-up video this week. So make sure you're subscribed if you're the 1 out of 4 people that haven't subscribed and you're this far into the video. Thank you very much. Otherwise, hit that like button. It obviously goes a long way to helping the channel, pushing the content out to more people as well. I know it's a bit of a pain in the ass if you're on your TV. There's a lot of people watching from TVs now. But yeah, if you could do that, like, easy done. Don't worry about the comments. Too difficult from a remote control. Time frames here, we have been watching 21 weeks out from the low, which is what has happened on each of the previous cycles after a significant correction running into that final peak. Now, as the market ran into that final peak, we had around 20 to 22 weeks left into that final peak. But one of the timeframes that I haven't pointed out yet on the channel, because we've been watching 21 weeks so far, is roughly 32 weeks. So we saw 33 weeks up from the low. This is the first cycle. First cycle run up into that huge blow off move into around $266. Huge correction down to $50, from $266 down to $50. So massive drawdown. And that move from that low to that final top at $1,200 was 32 weeks. So yeah, the market still ran down to this low, ran back up, but there was roughly 32 weeks. Now, if we look at that from today's date, it gives us a time count into roughly November of this year. So here's 21 weeks from that low. If we take a look at 32 weeks from the low, that puts us about mid-November, 17th of November. So I think that's pretty interesting moving forward. Should we see a first top and then maybe a second top? Otherwise, it's a nice blow-through move all the way 32 weeks in that top. Don't worry about the numbers on the side. No one knows what that's going to be yet. That is for something that I want to talk about in the next videos with how the cycles may progress. Something else that I've been thinking about here. So make sure you subscribe to the channel. Finally, let's have a look at some of the altcoin cycles as they end out the week. The stablecoin market has still not given any signs because it's decided to close almost dead on the 50% level of the entire range. So this is basically the extreme low to the all-time high and right on top of that 50%. So it hasn't broken down yet, but it hasn't taken off to the upside either. The idea here is we would essentially wait to see the stablecoins, the dominance breakdown, therefore more money is coming out of stablecoins into the stock market or into the crypto markets. That hasn't happened yet. Still watching for around 4.4%. And then for a massive bull mania for the altcoins to go nuts, the low here at 3.7%. So again, another week, another close with not much action or insights that the market is giving away. You can see we've had 1, 2, 3, 4 or so weeks at similar levels with only this 1 week popping out. Altcoin market, crypto total market cap, excluding the top 10, hasn't really given us anything either. Here we are sitting at around 7% on the dominance. The only good news here for the altcoins is that it looks like it's trying to base out here at 6.9. No breakdown at 6.8 yet, but again, no breakout higher, no overbalances to the upside. Overbalance means we're looking for more buyers to step into the market, give us those earlier signs when you're comparing to the current moves to the upside compared to the previous moves to the upside. That hasn't been met yet. So there is still less buyers, less buying of volume now than there was back in May. So looking back 2 months, there was more buying in that little altcoin flurry than what there is now. And that's obviously being shown up in some of the charts. Now, of course, there are a few altcoins that are looking stronger than others. I've talked about XRP in the previous videos, SUI, Sol, not saying that they're the stronger ones, but XRP in that position. And also ETH continues to hold at 2,500. But I'll cover those in future videos. Like, subscribe. The reports are coming out this week. If you're not subscribed, there is a link in the top of the video description. This is for the Bitcoin report, the altcoin report, and the economic report. 3 of those coming your way in the next 24 hours, beginning in the next 24 hours. All right, guys, I look forward to discussing this in more detail in future videos. Until then, take care. Peace out.